Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that top 1% analysts have rated a buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks, all in the tech sector, that do come in with a strong buy consensus, and those include some buy ratings from top 1% analysts. So today we're going to take a look at these companies, what it is that they do, and what these analysts are predicting for the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Also, just a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's take a look at these 3 top analyst tech stocks. First on our list today is Cadence Designs. They trade under the ticker CDNS, currently priced at about $284 per share today, making them our most expensive stock on the list. Over the past year, the stock has climbed 24%, gaining 6% year to date, but has cooled off slightly in the last 3 months, down 6%. Cadence Designs is an electronic systems design firm with over 30 years of experience. The company uses its experience in computational software to deliver the hardware and IP necessary for moving new designs from concept to reality. They count some of the world's top tech innovators among their customers, and their products include chips, circuit boards, and complete systems found in applications from hyperscale computing to 5G communication networks. They're also taking the lead in the next generation of tech evolution with their Allegro X AI system, which is a generative AI product that has potential to bring immense time savings to PCB design. For their first quarter back on April 22nd, the company did report an earnings and revenue beat, plus increased their future guidance. Their Q1 revenue came in at $1.01 billion, beating expectations by about $100,000, while their earnings per share came in at $1.17, outpacing estimates by 4 cents per share. The company also had a record first quarter backlog of $6 billion and CRPO of $3.1 billion. Management said that they're thrilled with the momentum of their Cadence AI portfolio, which is providing customers with the most comprehensive and impactful chip-to-systems design capabilities, and they're excited about the launch of their innovative third-generation dynamic duo hardware platforms that further expand their leadership. Following that Q1 earnings report, Cadence Designs has picked up ratings from several 5-star analysts. One of those includes Vivek Arya from Bank of America Securities, who is currently ranked number 12 out of over 8,800 Wall Street analysts. He rates the stock a buy due to a combination of factors, including Cadence Designs' strong positioning for the second half of the year and 2025 growth acceleration, and their leverage to all 3 phases of AI. Their systematic and less volatile growth pattern, particularly in the AI market, contrasts with the spikier sales growth of its customers, and the company's consistent and sustainable growth trajectory is supported by high visibility intellectual property deals and renewed booking momentum. Vivek's price target of $350 would imply an upside potential of over 21% for the stock, and he is one of 7 analysts that currently have a rating on Cadence Designs. It comes in as a strong buy with 6 buy ratings and 1 hold. And the average price target comes in at $335, which would imply an upside potential of nearly 18% from current prices. Down below on the low end, we have our hold rating here with an upside of 10% from Piper Sandler, and our high-end price target is that $350, and we have several analysts coming in with that price target. Our second top analyst tech stock is Marvell. They trade under the ticker MRVL, currently priced at $66.55 per share. They have climbed 15% overall in the past year, gaining 10% year to date, but in the last 3 months have fallen 15%. Marvell is a semiconductor company with a focus on producing chipsets for AI-related applications. They build their product line as offering the industry's most complete data infrastructure semiconductor portfolio. The company's strongest revenue drivers recently have come from AI-related fields, including its array of networking processor chips and its application-specific integrated circuit ASIC chipsets. These products offer solutions for both wired and wireless cloud computing, data storage, and networking, the applications that underlie AI applications. Marvell did just share their Q1 earnings report last week on May 30th. Both earnings and revenue were in line with expectations. However, revenue did decline year over year, and the company's future guidance failed to impress. They reported Q1 earnings per share of 24 cents, which, like I said, was in line with expectations, while revenue came in at $1.161 billion, which did decline 12% year over year. The company said this was above their midpoint guidance, though, driven by stronger than forecasted demand from AI, and that their data center revenue grew 87% year over year with the start of a ramp in their custom AI programs. Looking forward, they're expecting net revenue to be about $1.25 billion for the second quarter, give or take 5%. Now, the Marvell stock has no shortage of analyst attention, with 29 analyst ratings altogether, and plenty of those coming from 5-star analysts. But near the very top, we have Mark Livikas of Evercore ISI. He is currently ranked number 2 out of all Wall Street analysts. He increased his price target on the stock, saying that while Marvell's outlook implies gross margin decline in the second half of the year, the firm believes that there is upside to this margin outlook, as it estimates the company's higher margin storage business is only 1/2 of peak levels, and that the company is not baking in much of a recovery in its higher margin enterprise business. Mark's price target of $91 per share would imply an upside potential of over 36%, and out of those 29 current analyst ratings, only one comes in as a hold. And analysts' average price target comes in right around that $91 mark for an upside of 36.83%. Looking at our ratings down below here, you'll see a ton of those 5-star analysts weighing in. Here we have Mark's rating at 36% upside. Our high-end price target is $100 for an upside of 50%, and there are a couple analysts here. And our low-end price target is that hold at $77 for an upside of 15%. And if you've made it all the way to our third stock today, this is your reminder to make sure you hit that thumbs up button. Third on the list, we're taking a look at Microchip. They trade under the ticker MCHP, currently priced at $95.53. Over the past year, their stock has climbed 29.5%, gaining 7% year to date, and is up 12% over the last 3 months. Microchip Technology is a leading provider of smart, connected, and secure embedded control solutions. They provide mixed-signal microcontrollers, analog integrated circuits, and other semiconductors. They offer approximately 100,000 products to over 125,000 customers in different industries such as the industrial, automotive, consumer, aerospace, defense, communication, and computing markets. Their Q4 earnings report came out near the start of May on the 6th. The company did have inline earnings, but revenue did slightly miss. For their fourth quarter, they reported earnings per share of 57 cents and net sales of $1.326 billion. That was down 24.9% sequentially, which they had been forecasting it to be down at 25%. For the entire fiscal year, their net sales came in at $7.634 billion, which did decrease 9.5% over the prior year. Their president and CEO noted that they experienced a major inventory correction in fiscal 2024, leading to this decline in revenue. And despite this, their resilient operating model and rapid adjustment to the adverse business environment enabled them to navigate these challenges to achieve a non-GAAP operating margin of 43.9%. Microchip also increased their quarterly dividend by 18% year over year to 45 cents for a dividend yield of 1.8%. This is another stock that has plenty of attention from 5-star analysts. Not only do they have a buy rating from our number 2 analyst, Mark Livikas, but they've done one better. They have a buy rating from the number 1 ranked analyst currently, Timothy Arcuri from UBS. Following that Q4 earnings report, he did increase his price target on the stock, saying that fundamentals appear to be finally finding a bottom in the second quarter, with bookings continuing to improve month on month since February. Also weighing in was the number 2 ranked analyst Mark Livikas, who said that he perceives Microchip as playing a significant role in the rapidly expanding Internet of Things market, which is projected to reach tens of billions in units. He forecasts that their operating margins will expand by an impressive 1,000 basis points over the next decade. Microchip's strong buy rating comes from 18 current analysts with 14 buys and 4 holds. And their average price target comes in at $102.19 for an upside potential of about 7% from current prices. Looking at our list of ratings down below here, on the low end, we do have one of our hold ratings. They have a price target of $88, which would be a downside of nearly 8%. And our high-end price target are a couple here at $115 for an upside of 20%. So that is a quick look at 3 tech stocks, all coming in with a strong buy consensus and recent buy ratings from top 1% analysts. Let me know your thoughts on these companies in the comments down below, and head over to TipRanks to see what other tech stocks these top analysts are covering. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to. So please always make sure you're doing your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.